Hey guys, today I'm going to tell you the trading strategy that allowed me to retire in Hong Kong. And you probably already know, Hong Kong is not the cheapest place in the world. It's actually quite opposite. It's always ranks top 5 most expensive cities in the world. So how did I manage to retire in Hong Kong? What trading strategy did I actually use? Yes, I have used a trading strategy and I'm going to share it with you today. And today I'm not going to tell you about other things that helped me to retire in Hong Kong. Hong Kong might be expensive, but also the taxes are very low. There are no capital gain taxes, which is a huge advantage when it comes to investing. I also save a lot of money. I have aggressively saved every month for years. And this actually, of course, helped me to invest and to do my trading and to finally retire. So it's not only about trading, right? You first need to make money. If possible, pay less taxes legally, of course, blah, blah, blah. And save money, and then you can make the investments, you can make the investment strategy. But I'm going to tell you the reality. And the reality is that only 5% of the traders, only 5% of the short-term traders and day traders make money. Actually, I even saw other statistics that show that only 3% of the day traders make money. The rest is losing money. At the same time, 80% of the Wall Street fund managers underperform the S&P 500. Wall Street fund managers, as you know, they have huge salaries. They are paid millions of dollars. They work for big financial institutions. They have big infrastructure. They have the most expensive computers. They have the quants. They have this and that. And they still underperform the S&P 500, okay? For you to, from the S&P 500, you just buy an index ETF. Index ETF, S&P 500, NASDAQ, and you are already doing better than 80% of the Wall Street fund managers, okay? And the fact that only 5% of the traders make money makes me ask whether these people are making money due to luck or skill. Because the probability of you making money as a day trader is so low that I don't know if this is skill or if this is luck, okay? Because I can do day trading for a few months and make money. Now, am I a skilled investor or was it luck? Okay. Actually, when I was 18, 19, 20, 21 years old, I was doing a lot of day trading. I was day trading FX and futures and options and stocks. Back then, there was no crypto. Yes, I'm a bit old. And I did money for a period of time and then I lost it all. It was not sustainable. And there is a good reason why the average retail investor returns only 3% a year while the average stock market is returning 10% a year. Why is that? Because people do the mistakes that I'm going to show you in this video, and I'm going to show you how not to do those mistakes and how you can outperform the market and potentially retire in Hong Kong like I did, okay? First mistake is trying to time the market, okay? Timing the market is a loser's game. You know, the richest investors in the world, the top investors, Warren Buffett, all the top investors, they are not trying to time the market. No one knows when the market is going to crash. No one knows if we are going to have a bull market or a bear market. So the best investment strategy ever is to buy good quality assets, underpriced stocks, value stocks, good tech stocks, good cryptos with intrinsic value, and keep them for the long term. Because the fact is that if you miss just a few of the best days in the market because you are trying to time it, you are trying to avoid the worst days in the market, and you miss the best days in the market, your portfolio will suffer a lot. So I did this simulation that you see here, $10,000 invested in the S&P 500 from 2002 to 2022. So this is a 20-year period, okay? If you have invested the $10,000 in the S&P 500 and you just set and forget, 20 years later, you'll have $61,000. Pretty good, pretty good. But if you have just missed the 10 best days in this 20-year period, you'll have 29% less. You'll have only $43,000. And if you missed the 20 best days in this 20-year period, only 20 days, okay, if you miss 20 days, you'll have half of your return on investment. You will have $32,000 instead of $61,000. So really, timing the market is a loser's game. Don't try to time it. The best investment strategies is just buy and hold, because when you buy and hold for the long term, you let your investments to compound and to earn returns over returns. It's a snowball that keeps growing and growing and growing. But if you sell it because you are afraid or because you want to buy some dumb shit, you will break this compounding effect. You will stop the snowball. Don't stop the snowball. And I know that we are living in times of uncertainty. You have the Trump tariffs, you have the Federal Reserve interest rates. We don't know if it is going down or up. And the market, there is a lot of volatility, but volatility only equals risk in the short term. Volatility in the long term equals performance. So if you want to invest now, but you need the money next month to pay your rent, of course, volatility is your enemy, right? Because if the market drops 10% and you need to pay the rent next month, you are in a bad position. So if you need to use the money in the short term, of course, don't go and invest in volatile risk stuff like stocks, leverage ETFs, which I love, and crypto. But if you are looking to invest for a period of a few years, go ahead, invest in volatile stuff. You can invest in stocks, you can invest in leverage ETFs, you can invest in crypto, because over periods of few years, these assets perform very well. And yes, they are volatile, but this volatility only impacts investors in the short term. Warren Buffett once said that if you are not willing to hold an investment for 10 years, don't even touch it for 10 minutes. Okay, so what I do is I buy underpriced stocks. I try to find stocks whose revenue is going up, income is going up, the balance sheet is balanced, their margins are good, and the price of the stock is not going hand in hand. So let's say the stock is going down because of the recent market crash, right? But the revenue is up, the income is up. This is an underpriced stock, and you should buy it. When it comes to crypto, I look at the activity, on-chain activity, the number of wallets, the number of active users, the total value locked. You have a ton of indicators that will help you to understand the intrinsic value of that crypto and whether it can go up or not. And then finally, I also love ETFs and leverage ETFs. Leverage ETFs can give you like 2x or 3x the returns of the S&P 500 or NASDAQ, because there is an ideal level of leverage for you to maximize your returns. Well, this video is not about leverage ETFs. If you want to learn more about it, I will leave the link in the description of the video to my Be Limitless community, where you'll find a 4.5 hours course about ETFs and leverage ETFs. Okay, let's continue. So the next slide that I'm going to share with you is this one. This one is extremely important because it shows the S&P 500 total return, the percentage of positive periods over different time frames. So if you invest in 1 month time frame, you have a 62% probability of making money. But if you extend your time frame, in 75% of 1 year periods in the S&P 500, it was positive. If you go to 5 year periods, 89% of the 5 year periods in the S&P 500 were positive, and 94% of the 10 year periods in the S&P 500 were positive. So when I see a market drop like the one that we had recently because of the Trump tariffs, I know one thing. I know that the market now is cheaper. I know it's more likely to go up in the future. I know that people are panic selling, and I know that now I can buy it at the discount, and I can perform very well over the next few years. So when you see the market dropping like it has been dropping recently, always remember this chart, okay? Always remember, and remember that you are in a better position buying when it drops 20%. Okay, the market is crashing, everyone is panicking, the market now is 10 or 20 or 30% cheaper. Good, it's cheaper, it's a discount, okay? So my simple investment strategy at the moment is 1/3 in index ETFs, some of them are leveraged, 1/3 in stocks, and 1/3 in crypto, and hold it for the very long period. People often ask me, oh, but what's your exit strategy? When do you sell it? Well, there might be a few reasons to sell, but the number one reason to sell is I sell if I need the money, okay? Index ETF especially, I will never sell it until I really need the money. I don't have an exit strategy when it comes to index ETFs, because if you look at the very long term, let me switch here. This is the S&P 500. Let me put all. Here you see like the S&P 500 mostly goes up, okay? If you go to very long time frames. If you go to shorter time frames, of course, there is some volatility, but I'm not a short-term investor, so I'm going to hold index ETFs like forever. And let me show you this other important thing. Let me see, for example, let's go to the 1987 market crash. Okay, 1987, you see this crash here? You see these red candles here? People panicked. It was total blood in the streets. People, like, it was absolutely nuts, this market crash here. And now when you zoom out, this is just a small dent in the market, okay? This is just a very little crash, you know? So when you see stuff like this happening, it's time to buy because the market will recover. Look what happened after 1987. People that stay out of the markets because of this crash, look what they have missed. You will run, okay, until the 2000.com crash. So what I do when there is a crash is I buy it. There is opportunities in the market, and now we have here a good opportunity. Anyway, let's go back to the slides here. My exit strategy for ETFs is I sell when I need the money. For stocks, It's kind of combination of sell when I need the money or sell once the company fundamentals is no longer there. Imagine I buy a certain stock, I buy Nvidia because I like the computer chips, I like Jason Huang, the CEO, I like the market, I like the demand from the AI market. If one day Nvidia is no longer competitive, I might sell the stock. Or if the management goes crazy, I might sell the stock. Until then, I'm holding Nvidia. I don't have an exit strategy. This is how I play my stocks. A crypto, a little bit different. Sometimes crypto jumps a lot. The price goes up 200, 300, 500%. And in that case, I might take some profit. Of course, you should take some profit along the way because, especially in crypto, which is extra volatile, if I buy a crypto that goes up 500%, I will sell a nice chunk of it. I might hold a little bit, but I might sell the majority of it. This is very simple. It's an investment strategy that takes you like a few minutes every week. I share all my trade alerts in my Billy Metless community, link in the description of the video, and you can check it out. And again, remember Warren Buffett's golden rule. If you are not thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes, okay? You need to have a strong conviction why you're holding an ETF, a stock, or a crypto. Long-term thinking is your competitive advantage. And I know that you want to make money in the short term, but remember, I retired at the age of 39 in Hong Kong just by investing very consistently for 7 years. Okay. For 7 years, I invest in ETFs, in stocks, in crypto. I save a lot of money, and boom, 7 years later, I'm retired. Let me be very clear. 8, 9 years ago, I was broke. I had a business that failed. I had a health problem. I was very, very broke. And now I'm retired in the most expensive city in the world. So anyone can do it, really. The ultimate truth is that the best investors are those who barely touch their portfolios. There was a Vanguard study. Vanguard is a big asset management company, and they went to check who were their best investors. And their best investors were people that have died and they don't touch their portfolios. They were outperforming the markets. So please don't die. But the point here is that trade less, be a long-term investor, and that's going to reward you very handsomely. Stop trying to outsmart the market. Just keep it simple. Stay invested. Make money, subscribe to this channel, give it a like, and this is all I have to tell you. Just be a long-term investor, diversify across ETFs, cryptos, and stocks. If you want to check my trade alerts, you can check, and I'll see you very soon.